What's going on, people? Back again today with another video. Going to be having a look at the FTX derivatives exchange. This is the first of our exchange review series, and we're going to break them down into two videos. The first will be a short tutorial around using the exchange, and then we'll do a more in-depth analysis of the exchange's fundamentals, where we highlight the strengths, weaknesses, the areas for improvement, and then finally score the exchange using our review matrix. For more information, you can check out the description below, or you can visit our website at www.prooforeview.com. Finally, as always, all views and opinions expressed in our reviews are those of the team and not to be considered as financial advice. So let's go ahead and jump straight into the tutorial for the exchange. If you log onto the website at www.ftx.com, you greet with the homepage. The interface itself is relatively easy to use, so all the tradable pairs are listed here at the top. A little bit of information about the exchange is available on the homepage. So if you go ahead and register on the exchange, it's a very similar process as what users are used to elsewhere. You'll just input your email, your password, you'll then receive a verification email, and you're able to start trading. One cool feature we noticed when signing up on the exchange is it prompts you to enter a strong password. I think this is a really cool feature in terms of improving the security for the user. So let's go ahead and just log in, and let's have a look, go ahead and deposit some funds. So now that we're logged into the exchange, if we click on our wallet, we're able to see a full list of pairs listed on the exchange. We can go ahead and start depositing, withdrawing, and start trading. Deposit and withdrawal process is very similar to any other exchange out there. If you want to deposit, just click on the coin you wish to deposit, get the address and send over. Exactly the same in terms of withdrawal. Just enter the amount, the address you want to send to, input your two-factor code, and you're able to withdraw. One really cool feature in the exchange that we noticed was a conversion feature. So users are able to convert one currency to another quite seamlessly. For example, if a user wishes to hedge their BTC price in terms of price movements, they're able to convert into a range of stable coins. They're able also to convert into other currencies. So it just saves a lot of headache when users are trading. You're basically able to deposit any currency and just convert it immediately on the platform. So if we go ahead and have a look at the markets offered on the exchange, as you can see, there's a wide range of futures contracts. One of the cool things is that this exchange offers a lot more variety than several other derivatives exchanges. For example, as you can see, there's a lot of mid-cap and top-cap coins listed on here that you don't see elsewhere. But the really unique element of FTX, and I think the reason we really wanted to do this review, was to highlight the altcoin indexes that they've made, also the exchange indexes and the Chinese coin indexes. I think that personally these are really new and innovative products that are probably going to be the future of the way we trade these coins in, say, several years' time. It could be potentially as revolutionary as how BitMEX disrupted the market back in 2015 when he started actually introducing these Perpetual futures contracts. So enough talking about it, let's actually jump into it and see what these things are about. So let's have a look at the altcoin, or the Alt Index Perpetual futures contract. So as we can see, it tracks the price of a basket of altcoins using a weighted average of coins 2 to 10 in a top 100 list. This means that users are able to get exposure to 9 different coins in one product or one contract. If we move over, the mid-cap is very similar. This uses a weighted average of, I believe it's coins 11 to 50. And moving on, you have your shitcoin index as well, which is coins 50 to 100. The one I really want to talk about today is the exchange index. And I think the reason I want to talk about it is how would someone use a product like this. So first of all, the exchange index tracks the price of the basket of exchange tokens using the weighted average of Binance token, Huobi token, OKX, and Bitfinex's token Leo. So users are basically able to get exposure to all 4 of these in this one contract. Now, an interesting article I came across a couple of weeks ago, or I think it was around about a week ago, was an article highlighting how BitMEX, the market leader, hit a 2019 low in terms of its volume. So this article is dated the 17th of November. And I think one thing users can take away when they read something like this is BitMEX is the market leader in terms of volume and in terms of users. So if they're having an all-time low volume or a low volume for the previous 12 months, we can quite safely deduce that a lot of other exchanges are feeling in quite similar position as well. So have a look, this article was dated on the 17th of November. As you can see, price has broken down quite swiftly since then on this index. And I think it offers an opportunity for traders to basically take fundamental news like this and apply it to a certain market. So again, the basic premise would be that if exchanges are having lower volumes, they're generating lower revenue. How does lower revenue affect their projects? How does it affect their token? And as you can see, price has broken down quite substantially since that article highlighted the drop in volume amongst the market leader in the industry. So if we go ahead and actually move over and take a trade. In fact, before we do this, let's actually have a look at each instrument offered alongside each pair. So we had a quick look at the markets. Once we clicked on the market, if you then go to the top, you can see the instruments that are offered alongside. So as you can see, we now clicked on the exchange Perpetual futures contract. For anyone who's not familiar with these, basically in effect this is a daily rolling contract which users can close at any time. You can also see the futures contract here as well. The futures contract is always highlighted by its date, so as you can see here it's got 27th, which basically means closes on the 27th of December. And finally there's the tokens, but I think we'll talk about these a little bit later on in the review because these are quite unique themselves. So going back to placing an order, if we click on the order price for the instrument or the pair we wish to trade, we can then decide on the type of order we want. I mean, I would assume before that users have formulated a trade idea in their head, so I think we're going to do something similar here just to give you an indication. I believe that exchanges may have a little bit of a bounce. If you look at BTC price drop recently, potentially users may flood to exchanges now to buy relevant coins. That may only be BTC, but potentially may filter down into other coins as well. So we're hoping that exchanges will have increased revenue over the next several weeks if BTC maintains its price range. So let's take a long on this index contract. So all we're going to do is we're just going to highlight the price that we wish to trade at. So let's just go off the price on the ask side. Let's talk a little bit about the orders. So as you can see, there's various types of orders here. Some of these are quite advanced. The ones that you guys are probably most used to if you just trade on a regular altcoin exchange is your limit and market order. So these are just basic orders. Limit order means you can set the price you wish to buy at. A market order will mean that it will just buy at market for the amount you determine. And then we're able to just go ahead and place a trade. Someone wants to be a little bit more advanced. There's these advanced order options, but I think we'll talk about those once we've actually got into a trade. So if you go ahead, let's just open it at market for ease of use. We're going to go ahead and we're going to put in the full amount, so I believe I've got $71 available. Now, before we get started on actually taking a trade, there is margin available on this exchange, but for the purpose of this review, I'm not going to get into it too much detail because it's not something we promote and it's not something we're skilled to advise on. We always highlight to users, if this is the first time you're using a margin-based exchange, do not use the margin, just get used to trading on their platform, get used to being profitable, and then that's something you can look at further on down the line. So in terms of the contract, let's open it up. We're going to get 0.099 exchange for $71. So all we're going to do, we're going to click on buy, and then we should be good to go. We can actually see the price has moved since when we placed the order, and now it's quite instant. We're now in the position, opened it at a price of 716, so it was below our 716.4, so it opened it at market, or it got involved at market, even though we placed a limit order, so that's quite handy to know. And yeah, we can get all the information about our trade here. So again, conversely, now we're going to look to exit the trade. What we're going to do, we're going to manage this accordingly based on our trade plan. So the first thing you need to do, if you want to place the relevant orders for a position that's already open, you need to click on reduce only. This is very important because if you don't do this, it's not going to recognize that this is a trade that you wish to correlate these orders to. So for example, if you don't post reduced only and then you now post two orders to exit the trade on a stop or a limit, those are going to be open potentially as new trades and not correlate to this trade here. So you're potentially going to mess your positions up. So now we clicked on reduce only, we're going to close 100% of the position. This is a sliding scale, so users can scale out, they're able to put it at whatever they wish. We're just going to leave it as it is. Based on our trade idea, we think that the price may bounce to this most recent support here, which is what, 750. So just to be on the safe side, let's put it on at 748.49 or 748.48, and we're going to place it as, let's say, our take profit. There's two different types of take profit. The regular take profit will be a market order, so you place it at that price. When the price gets to it, it's just going to sell at market. Then there's also a take profit limit, a little bit more advanced. Users are able to set a trigger price and then a sale price. Once it reaches the trigger price, the order will then be placed on the books and it will be sold at market accordingly. We're just going to set a regular take profit. What did we say? 748.48, same amount that we got involved for. We're going to close our position 100%. So all I would do, it actually gives you a warning as well that this is an advanced order type. So I think that's quite handy. So let's click on sell. The order is now placed. And conversely, let's set a stop order so we make sure that we've also got a safe order as well. So as you can see, now got an order placed and we're going to sell. Yeah, we're going to sell once the price reaches 748.8. So conversely, like I said, let's set a quick stop as well so you guys can see how to do the same vice versa. So we're going to set a stop at market and we don't want to risk it going to new lows. So that is, we believe that price is going to go no further than the close of these recent candles. That's 698. We're going to use a tight stop. So all we're going to do is we're going to enter our stop price, which is 698. We're going to leave it at the same amount, so we're going to close our position at 100%. Make sure you have reduce only clicked. And we're also going to leave it as a market order, so the price reaches there, it's just going to sell out immediately. So there we go, that order placed. So we've now got our order open. We've now got an active stop, an active take profit, so we can pretty much just leave this trade alone. I'm actually just going to close this trade just for the purpose of this video. So let's just close it. There we go. Boom, done instantly. So click back on our deposits page or our wallet page. We can now see that the trade itself, we're going to get on the right one, the trade itself has been closed and we've now been returned a USD balance. In fact, one thing we forgot to mention during the whole trade process, but I think this is really important about the exchange because again, it's a really unique feature to FTX. All contracts are traded in a USD base pair, they're also settled in USD. So anyone who's used to trading, let's say the BTC Perp contract over at BitMEX, they're aware that when you trade on that market, you deposit BTC to get trading and your profit and loss is measured in a BTC value. Now, this can benefit users on occasions where potentially the BTC price goes up, your base asset or your initial asset is actually worth more than when you initially started trading in a USD value. But in a converse manner, when there's a bear market, let's say, and you're shorting, you may end up with more BTC than you started if you have a successful trade on a short, but that BTC is now worth less than when you first started. So I think for institutional funds especially, I think this USD base pair settlement is really handy, and I think, again, it just really helps traders build their portfolio in a set asset value. So if that's what you want to do and trade in USD, this is probably the derivatives exchange for you. So now that we've had a look at the perpetual and futures contracts and how to open and close a trade, let's go ahead and take a look at the leverage tokens available for trading on FTX and how these work. So again, this is another really cool feature on the exchange, and these are unique markets that you won't find anywhere else. And these are basically leverage tokens that allow the user to trade without actually using margin itself. So how does this work? So if we bring up the Doom token, I think that's quite poignant and quite apt considering the state of the market right now, how people are feeling. This is basically a 10x short token. That's an ERC20 token that seeks a return corresponding to minus 10 times the daily return of Bitcoin or its base pair. So how does that actually work? So if we click on the walkthrough guide provided by FTX, you can see that leverage tokens are ERC20 tokens that have leverage exposure to crypto. For example, take ETH Bull, a 3x long ETH token. So for every 1% ETH goes up in a day, ETH Bull goes up 3%. For every 1% ETH goes down, ETH Bull goes down 3%. So we then correspond that back to the market we listed, so the Doom USD. So basically, if Bitcoin goes down 1%, Doom USD would go down 10%, and vice versa. If Moon means that Bitcoin was to go up 1%, the corresponding token would increase in 10% value. So again, these are leverage tokens. We always recommend that users are experienced traders and they do their due diligence before utilising any margin product. I mean, just while we touch on margin products on the exchange, we might as well have a talk about the available margins that are offered. So as you can see here, the maximum leverage available to users is an eye-watering 101x. Yeah, I'm not sure if that's available elsewhere on the market. You tend to see exchanges go up to 100x. Again, I think we recommend that users do their own due diligence and research on how to utilise leverage before actually using this on any live trading account. It means that the price you see here being traded corresponds to the price movement of Bitcoin in one particular day up until the close of trading. So each one of these candles represents a 24-hour trading period for Bitcoin, and the information gathered from it basically highlights the volatility and price movement of that particular day. So as you can see, a user would basically look to trade on this. If he was going long, he would believe that the price movement for that day and up until the close of the contract would be more than the price that's highlighted by the trade or the price action right now. And conversely, if he believes the price movement of Bitcoin will be less than the price highlighted right now, he would then open a short and he would then look to profit from the difference in price. So an easy way to describe this, the price is trading at 322 as we speak. If a user believes that the price of Bitcoin is going to move less than $322 between now and the end of the day, so the close of the contract, he will then put a short on. Whatever the difference is, and let's say his trade is successful, whatever the difference in price would be, so let's say the price of Bitcoin only moved $100 in this day, he would then profit the difference between the price of when opening the contract to the price of when he either closed the contract or at the end of settlement, which on this particular contract would be the end of day. Now, there's several different instruments offered here, so there's a daily contract, a 3-day contract, I think that's a 10-day contract, and yeah, it just goes on accordingly. So again, this is a really cool instrument, not being offered elsewhere. So as we can see, the exchange itself is really looking at what innovative markets it can actually bring to the industry and what makes its exchange stand out from everyone else. So before we wrap up on the video, one last thing we wanted to touch on was the fees for the exchange, so let's go ahead and have a quick look. In terms of the fees, as you can see, there's a tiered fee structure for all futures and spot markets. Basically, the more volume someone has over a 30-day period, the more the reduction in their fees. In terms of their tier 1, how does that compare to other exchanges out there? I feel personally it's quite impressive. The maker fees are 0.02%, the taker fees are 0.07%. In comparison, we look at Binance, their maker and taker fees for their first tier are 0.075%. So it's actually cheaper than maybe the biggest altcoin exchange available or out there. In terms of Binance, now we're talking about it, there's also an FTT token, which is similar to Binance's token in the sense that the utility for it offers a discount on trading fees. As you can see, the more FTT someone is holding, the larger their discount on the fees. This goes up to a maximum of 60% discount. Someone's got to be holding quite a lot of FTT to get to that stage. And then finally, the other fees for the exchange, so there's no fees on the settlements. The leverage tokens that we talked about, the Doom, the Moon, the Bull and the Bear, they have a creation and redemption fee of 0.1% and also a daily management fee of 0.03%. Using leverage on the exchange of 50x and above increases trading fees by 0.02%, and 100x or above increases the fees by 0.3%. And it states the reason for this is that these extra fees are paid towards the insurance fund. I think this one thing alone highlights the importance of knowing the fees of when you're trading on an exchange. If you're quite new to margin trading, it's always well worth looking into that and doing your due diligence before you actually start live trading on margin. Finally, there's no deposit fees, which is normal for the exchange. But I think one thing that stood out for us is no withdrawal fees on the exchange as well. So I'm trying to scratch my head and think the last time I used an exchange, I didn't have to pay a withdrawal fee. So that's very much a welcomed addition on the platform. And yeah, so that's kind of enough about the fees. Finally, just going back to the exchange itself, I mean, in conclusion, you know, we really like trading on this platform. I think the one thing we've touched on over and over again in the review or the tutorial is the number of unique features that are on the platform. So I'm not seeing these across any other exchanges right now. It's really nice to see that they've put thought into innovating the products available to users. So again, a definite kind of positive from the exchange themselves. This just isn't a regular altcoin exchange or a regular derivatives exchange. It seems to have combined the best of both worlds, or combined both together and got the kind of nice balance in between the two. So yeah, overall, we really had a pleasant experience trading on the exchange. As we mentioned, it's offering innovative and unique markets. So if you guys do want to trade on the platform, the link's in the description below. We've also done a more detailed and in-depth analysis of the exchange's fundamentals as part of our project review. If that's something you're interested in, the link again is in the description below. And finally, if you guys enjoyed the video, please feel free to hit the like and subscribe button. We have plenty more of the tutorials and exchange reviews coming up in the future. If you guys have got any choices for exchanges you'd like to see reviewed, please feel free to hit us up in the comments below, and thanks for watching.